So I want you guys to know, okay? So the first thing is this. GameStop. This is GameStop's chart. This is their monthly chart. I tend to really like this chart. We're riding it right to the purple, okay? Right to the purple. Purple's the top side. The bottom side is going to be your yellow line, your gold line. That's your true level of support. I have your 50-day and your 200-day moving averages on here. For your weekly, here's your weekly. As we come through, we have tremendous support. We rode the purple. I redrew the purple 2 days ago? 2 days ago. But as I said, this green line is your 50-day, and this is your 200-day moving average. But on your weekly, we're crossing over. So the weekly is going to cross over to the top side. The daily actually dipped down below the 50-day. I mean, below the 200-day. So we're supposed to have a downward trend here because we dipped down. But I've seen us dip below it and fake it out. Now, we followed, look at this green. It followed all the way up to the ceiling. You can go right here to the 4-hour chart. Let's go to the 4 hours real quick. 4-hour chart went straight up against the purple, hit, came down, and just pushed up against it again. And either we have a breakout come Monday, which I think we will, and I'll explain. I think we break out Monday, okay? I think that the market's going to sell off come Monday morning. I think the true fear is going to set in because there are some indicators here for the whole market. Here's the SPY. So we're going to go to the, we can do the 1-hour chart there. We can go here and do the monthly. Okay, so this is your monthly. Here it goes. SPY's going, right? But I think the SPY's going to actually fall through and fall out the bottom. I think the weekly shows you just how weak it is. It's going to come test this moving average way down here, but it's the daily that gives it away, okay? So the daily is here. If you can see here, guys, once this 50-day moving average actually crosses over the 200-day moving average, you always want to look at moving averages on the daily chart. Doesn't matter about the monthly, the weekly, the hour. It's always on the daily chart because it's by the day. As you look at this right here, the 50-day is coming down below the 200-day. When that happens, guys, it's called the death cross. They are literally going to form a death cross, and once they form that death cross, you should see this bottom half of the S&P start selling off. That's why I think we sell off Monday, or we're going to start that trend. The last time this sold off and dipped below was here, 2022. In 2022, they hit an all-time high right before it, 457. We had a death cross. The death cross was even on an uptick. You see this fake pump? Boom. It crossed over, and as it stood underneath, you lost all momentum, and you fell through the whole floor. And there's no getting it back. I don't care if it pumps and it hits the 50-day again. That's going to be the resistance. You're going to fall right back down, double bottom, and it touched all the way to the low of 336. So I anticipate the S&P, because based off of mathematics, it's going to have a death cross by Monday. It'll have a death cross right there. As it goes ahead and cross, because it has no choice because we're way down here in the 533s. We're not at the 6s. So as it crosses down, we might play around for a little bit, but it won't be long. It's going to come all the way down. And yes, you're dropping from 533 all the way to, well, that one dropped, let me see, that one dropped 120 points. So even if we have the percentage-wise of a 450 drop all the way to a 330, that was 336 from 457, even touching again at 442, down to a 336. You're going to look at 3, 4 is 10%, another, that's 400 flat, another 10, so 25% drop basically from the bottom. So if you go a 25% drop from way up here, you're just going to divide this by 4, where you're at right now, and you're looking somewhere in the realm of having another 120 bucks come off of it, 130. So yeah, it's going to be a problem. You're going to be down at the 4 flat, 398. So 4,000 points on the S&P, and that's where I see it. I see it coming down to $400 a piece, and it's going to be terrible for the market, but it's not going to be terrible for GameStop because I just showed you GameStop is going to be trending the opposite direction. You can fake me out, you can short it all the way down, and that's what gives you this dip under the 200. Remember, we dipped under because they shorted the shit out of the stock. It's not true price movement. We went from almost $30 down to $20. That's not true price movement. They did that to you just because GameStop announced that they're going to have money, because GameStop announced they're going to do senior notes. GameStop's the opposite inverse of the market itself, but that's how I see it happening. Bitcoin's at 84,000 right now. I don't think Bitcoin can hold on to these levels much longer. I think this weekend they're going to pump it as we speak just to get more liquidity out of it, more equity on their side. But the leverage itself of this market is going to be crippling you, without a doubt. This is their leverage. So I anticipate the VIX going up. I think the VIX will go up within the next 2 weeks. And as the VIX goes up, it'll be approaching all-time levels, like 80, without a doubt. So as it peaks up over here at the 80 mark again, if you've never seen it, it's happened before. There was a 65 there, and there was an 85 here. This is during COVID. But you're going to be looking at more transition than ever, and here's why. And I'll show you why, actually. We'll go here. So as we go to these, we're going to go to this right here. This is the dollar. All right. We talk about the dollar index every now and then. I don't talk about it that much because truth is I don't track it the way some people do. Maybe I should. But over the last, is this the daily chart? I don't want the daily chart. Even on the daily, it comes from 100, 101, all the way down to 99. So yeah, but let's look at it on 3 month. 3 month at 109 down all the way to 99. So 10 cents basically, whatever it may be in my head, because I think about dollar for dollar, right? The dollar index itself. So that just means people are transferring dollars out of the U.S. markets. This is not where they want to be. So they're selling off equities and getting the dollar out of here. And so it weakens the dollar. And why does that matter? Let's talk about it from like a macro footprint. If U.S. dollars are leaving, that price point you see on the S&P, whether it be 533 on a rebound, 540 on a rebound, doesn't matter because that's not the same dollar. It's one thing for it to be 540 and the dollar be at 109. The market's at 600 and the dollar's at 109. That's amazing. Wouldn't you agree? I mean, it's this high in U.S. dollars, and U.S. dollars is as strong as it can be. Well, guess what? It's this low right now, and U.S. dollars are the lowest they can be. They just keep dropping even further and further. So with oil dropping out the bottom of the half, and then I also saw, of course, gold peaking like you've never seen it peak. It went from 2023, at 1,800, 1,900. Even at one point in 2022 right here, it was at 1,600. Well, we're double that now. We're at 32. So that's crazy for gold. I just want people to know. But if you go over the last month, gold rebounded from way down here at 2,900 all the way to 32. That right there is a 10% move on gold in the span of 4 days. Literally 4 days, it went 10%. No way.